Welcome to the Trading Lounge. Here we're looking at the US 30, and as we see it so far, we see that we've got a clear three-wave structure to the downside. So that's bullish corrective, so we should be making new highs here. However, this particular structure would also need to take out the top of this point here before we can call this an A and a B and a C here. While it's still under this high here, especially on the cash markets, then this particular pattern can turn into a five-wave structure to the downside, and then we would obviously be in a larger correction. But while we're in a trend to the upside, then we need to treat the bias, we need to stay with the main trend. So in this case here, this is the Dow on the daily chart here, and we're looking at this three-wave price action through here. So if it stays as a three-wave price action and takes that little high out here on the daily, then we can move, then we'll be moving higher from there. But if this does turn into a five-wave structure, then it will simply be like this. We've got the down for one, and back for two, and down for three at the moment, as we're calling it an ABC here. But if we get a 4 and a 5 down here, and we get this five-wave structure to the downside, then we'll get a three-wave counter trend, and then we'll get another 5 waves down from that, and that will be the larger A, B, and C at this point here, and then we'd be working up from that point there as such. So that's how that would play out. So it's just a bit of a wait and see, and it's probably more important to look at this on the cash market rather than the futures market. But essentially, on the US 30 here, this top's got to be taken out, and this will be the same for the S&P 500 as well. So the S&P 500, we've got this A wave, this B wave, and this C wave here. It needs to take out this top here on the cash market at, say, 1563, and that's why I've always held the 1565 there as being, back into the bull market game. So look, that's what we're looking at. We just need to allow this to play out to see what we have. So just be a little bit careful in these markets until we can get that sorted out. Once we understand where we are, then we can trade on that side of the market. The Australian market here, the Asx200 Cfd, we're still looking at this five-wave structure to the downside. So we've got down for wave 1, wave 2, then we've got 5 waves down here for wave 3 here, then the A, the B, and the C wave here for wave 4. And it does appear that it's a bit of a rough diamond, but it does appear that we've got 5 waves down through here in terms of the down for 1, back for 2, down for 3, 4, and down for 5 here. But once again, we would need to see this back above the 4.9 and preferably building up to the 4.930 and finding support on the top of subgroup 1 there to prove that, because otherwise we're still in this main trend to the downside. So when we look at, normally I would look at, just take some time off here for a second, normally would look at CBA in terms of its pattern as sort of a bit of a leader here, but this has been a very choppy environment here, one of the worst that I've seen for a long time. So if we just use some other stocks like WBC, for instance, which just got a bit of a cleaner wave count as such to work out here. And what I mean by cleaner is that we can see that, from this high here, they all had the same high together, the same as the ASX200. But this one here, we can see that we've got basically 5 waves down through here, haven't we? And then we've got this move back up through here. So we're basically looking at an A and a B and a C through here. So we're starting to get that 3-wave structure. The ASX is still at this point here. And when we have a look at A and Z market count as well, it's also a little bit cleaner still as well, because it's actually come down here further, where the WBC is still further up through here. So realistically, we've got this this ABC correction through here as such so far. But we also need to understand too that you know, it's possibly an ABC, but it could certainly also turn into a 5-wave structure as well, like this here. So we need to be mindful of that. So that means getting the extra 4th and the 5th here. So you know, we're still quite deep in corrective activity in Australia, and obviously that's being pulled down by the BHPs of the world and the basically the metal section through here. But if I just squash up through here, you know, and this is what we identified before as well. You know, after this 5-wave structure coming down through here. It's a big 5-wave structure, isn't it? You know, so it's coming down through here, and then we've tracked this up through here as being corrective, basically an A and a B, and 5 waves up in wave C, up for 1, back for 2 to here, the 3, the 4, and the 5. So technically, that low there should be taken out. This market will come down, of course, and, you know, bounce off the 30 here, the major trading level. But it's still, you know, if this is corrective, that low should be taken out in due course. There'll be support down here, so it'll bounce around a lot. What you see is not always what you get next, so just sort of be mindful of that. But so we can see that the banks are still correcting to the downside, being dragged down now by, well, always being dragged down by the resources. Okay, let's have a look at the metals and also the dollar. I just want to start with London LME copper here, and because we've been, as you know, we've been tracking this particular triangle pattern through here for quite some time. We've and, you know, well, we've just basically been watching it sort of break out through here, and we know that triangles are in 5-wave structures, and they're labelled as an A and a B and a C and a D and an E, and each leg has got 3 waves in it. This is the easiest one to see here. This one here, this one here, this one here. So the waves are at the top in most cases, and then now we start to see an impulse wave to the downside. So essentially this low here should be taken out through here, and I guess the sort of norm with triangles is taking the length of this here and sort of popping it on over here. So we'll be looking down to 6.4 here, which will be 6,400, will be 6,500, won't it? It will be the medium level there. So there's still a lot of distance to go into this, and we'll also be looking at a 5-wave structure down here before it ends as well, down through to here. So look, this is, copper's used in everything. That's why it's quite central to the base metals, and that's pretty much the story that's sort of unfolding. And you know, the precious metals are on the same journey as well. So that's really dragging down, of course, the commodity dollar countries as such. So that's one of the reasons there. This is the copper in the US here, and we're just looking at this in terms of being supported on 330 here. We're seeing our first bounce come off the 330. It is in a corrective wave to the upsides here. It's in 3 waves. We've just got to be a little bit careful, because wave 4s normally get a little bit complicated. It could be reasonably simple like this one here, or we could end up with a triangle pattern through here as well before we get a drop down through here. And once it comes down into wave 5 here, then we'll see a rally to the upside through here. Yeah, there's a bit more through here, and obviously BHP is going to reflect this as well. So BHP is finding a bit of support at the moment, and, you know, it will edge down the same as this, and then it will edge up further. So there's a lot of overlapping wave structures about to occur in this market here. I'm just going to go to the silver chart, even though we sort of focus on gold a lot more. We can see that silver kind of leads the way a little bit, well, sometimes, and has been through this sort of bear market here. But we can see that what we're looking for here, and be the same as gold, is this wave 4 to come back up. So we've had this strong little wave 5 down through here to make wave 3, so we're looking for wave 4 to come back up to 38.2, so roughly the 2750 sort of area through here before we see further downside here. The gold market's the same, but it's retraced a little bit higher through here. You can see that this is a daily chart here, and you can see that it's retraced quite a way back up through here, but let's just see how it pans out at group 2. So group 2 is 1572, 1580. Let's see if it finds support on there or not. But it is sort of interesting in the way that if we just track this back a little bit here, we've got wave 1 here, wave 2 here, we've got wave 3 here, wave 4 here, and we're looking for wave 5 to the downside. Now in wave 5 we would have 5 waves, so we've got the 1, the 2, the 3, the A, the B and the C here for wave 4, and we're looking for wave 5 down through here. So when we count the waves on silver, it doesn't look complete, and even on this one here, it looks like this is still a wave 4 moving up here, but it is moving up a bit high, so we just need to be a little bit careful. We may even have a low in here for gold. At the moment, the move up here in gold is in 3 waves. So from in here, we've got the 1, the 2, the 3, the 4, and the 5 here for wave C here. So we really need to see it sort of fail support in this sort of area up through here. So let's just see how that pans out in group 2 here. There will obviously be some sort of vibration across here. Let's see if it finds support on through here, and also if it develops a 5-wave structure up through here as well. So let's just give that a little bit of time there. I mean, yes, I mean it's the other commodities still got further to go down. So we may be right at the top here. That's what I'm just trying to point out. So we just need to allow that to play out a little bit, and let's see if we get 5 waves. It's not like we're going to miss a lot anyway, because if it is a low here and we do get a 5-wave structure in here, then we'll get a 3-wave counter trend and we'll pick it up there. So we'll get our timing right. So be careful in chasing it, but trading from one number to the next is fine. Alrighty, let's have a look at FX and the dollar. Just going to start with the euro here, and this is the weekly chart here. And we feel that we've got the 5 waves down here completed now. We've got this 3-wave counter trend here. So we do see that because we've got a counter trend here in 3 waves and we've got 5 waves here, then we'll be looking for a retracement probably around the 13150, maybe the 132. Let's just see how we go with that, but we are looking for a rally now, and we've had a strong move up through here. If we just move on to the daily chart, now we can see that because we've had this strong move up through here, we're considering this to be the A wave here, and then we'll be looking for the B wave, and then we'll be looking for the C wave up. Now I've got it at 132 here, but it may be 131.50 here. So let's just count the structure as we move up through here. But what we can expect through here is we're at the 130 here. The 130 is a minor level. In fact, it's the top of minor group 1. We'll see this, we'll definitely see some sort of vibration across here. The euro can have very low retracements when it's in a bit of a bear market. We've had this complicated structure through this part of the leg here, in this last 5th wave here. And we have to label it as a ending diagonal triangle. And within a triangle, within an ending diagonal triangle, there is 5 waves, such as the 1, the 2, the 3, the 4, and the 5. But in a ending diagonal triangle, each wave structure between each wave here will be in 3 waves. Okay, so because a triangle is a 3-wave structure, it's a 5-wave structure overall, but internally each wave will be 3 waves within that. And this is pretty much a textbook ending diagonal triangle for a bear market, and the same for an ending diagonal triangle to the upside as well. So the internal wave structures are 3-wave waves each, and it fits quite well actually. So we'll be tracking this ABC up through here, and that's what we're doing at the moment. We're at the 130 here, and if you know your numbers, then you know that there will be some type of corrective pattern across here that could get a bit complicated. We can pretty much say the A wave is completed now, moving up through here, so we'd expect the B wave to move in. A B wave is always in 3 waves, so we can expect some type of corrective pattern through here. One leg will be simple, the next one will be complex, and the next one will be simple, and then we'll see another move up. And as mentioned, we'll be looking at the 13150 up through here somewhere. The A wave and the C wave will have some equality relationship involved there, but the most important thing is that once we're in the C wave here, C waves always got 5 waves, we'll be counting 5 waves up, what we have done in the A wave here in terms of up for 1, back for 2, up for 3, 4 and 5, and there will be 5 waves in each of these structures here once you pull them apart. I have labelled them as an A and a B and a C because I'm looking for shallow retracements in the euro, but certainly they could certainly be wave 1 here and wave 2 here and wave 3 moving up as well. So we just got to be mindful of that as well, but we don't have to concern ourselves with that just yet. People trading the euro and related pairs expect some sort of complicated correction that's going to be sticking to this number through here, and this A, B and C here would create the opposite in the dollar as well. So we need to look at the US dollar in this relationship here in terms of an A and a B and a C pulling back further down into this area through here. This leg here may not be completed just yet, so we may see this move down into here and then back up and then down through to here. The Australian dollar has we figured that the ABC pattern could have been finished the other day here, but it's just basically expanded larger, and we'll look at that in a moment. But we're still looking at this as an A and a B and a C wave down through to here, and just viewing that a little bit closer. We had on last time we talked, we were looking at the A, the B, and we're looking at the C wave to this point through here in terms, we had our 5 waves down, the 1, the 2, the 3, the 4 and the 5 through to here, but we can see that it's just expanded larger, so that means that we need to count this down as 1 and back for 2 here. This is all of the 3rd wave down through to here and the 4th wave back to here. And then there is the 5th wave coming down through to here. Now I just need to explain this a little bit in detail here because there is a couple of counts here. The 4th wave is to here. We could also really have the 4th wave as an A and a B and a C there, where that basically, where this wave 2 is here as such in here, so this could be the wave 4 here. This strong move down through here is in a little 5 wave structure down through to here, so that could be wave 5 here, okay, so of the C wave, so that could be the low there. And if that was the case, then we would need to see support on top of 104, and then you could scale in on 104.10 here and then continue to build it up through that way, if that's the case. Now I think this is more likely here with the wave 4 here and sort of failing from this point and working lower in one more wave structure to the downside. So in terms of the 1, the 2, the 3, the 4 and the 5 coming down through to here, will it come down? All it needs to do is take out that low there. Well, technically it doesn't even need to do that. Technically it just needs to create 5 wave structure in this space here, and the 5th wave here, because the extension was in the 3rd, the 5th wave here will probably be the same length as wave 1 here. So that's something to look at here. So look, a bounce off the 103.50 could seal that wave 5 to that point there. And if that's the case, then we'll be looking up for wave 1 as such here, back for wave 2 and up for wave 3 for, you know, building up through that way there. But that low could come in at 50, or it could come in at 30, 103.30 there. So that's something to look out for. But basically, in terms of trading, what you'd want to see is you want to see a move down through group 2 here, and then you want to see support on the 103.72 and go long from that stage there. We'll at least scale in a bit here, a bit here. There'll be problems at the 104, but if it builds up there, then you add to that and add to that, and then we'll be looking back up at the 105 and above for that because of this ABC correction here. We'll be looking for these tops to be taken out through here. Alrighty, well, that's it. Thanks for listening, and good morning and good luck.